Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon, welcome to the COB. I'm Sue Lannon. Now let's have a quick check of the markets, how they're settling. The CBO 200 fell 0.4% and it was another down day on the market with consumer stocks and REITs leading the falls. That's as investors consider that rate cuts may be off the table in Australia. Other news we saw that impacted on the market, the Bank of Japan kept interest rates on hold and investors focused on the meeting between US President Donald Trump and Chinese President Xi Jinping in South Korea. It only lasted about an hour and 40 minutes and afterwards Donald Trump told reporters the meeting was, quote, amazing. And we also have heard not much news coming out, but Ukraine and fentanyl were also discussed in the meeting. Now, Chinese shares actually jumped to a 10-year peak. Let's have a look at some of the themes today. Fed fog. The Federal Reserve cuts official interest rates as expected, but not everyone on the FOMC agreed. So the Fed's watching inflation, which is running at 3%. It's also concerned, though, about rising unemployment, and Chair Jerome Powell says rate cut in December is not a foregone conclusion. Board blues. James Hardie investors dumped the chairwoman and two directors. That's over anger over the purchase of the US building materials firm ASIC. And Coles to cool. Coles beats Woolies in first quarter sales. That's as sales revenue rises 4% to nearly $11 billion. But will Woolworths fight back as it ramps up investments in its stores and offers more discounts? Let's have a look now at the sectors of the day. Now, we saw consumer discretionary stocks plunge, and again, that's because they're interest rate exposed sectors. JB Hi-Fi fell. That's because investors were disappointed with its sales report, even though it met expectations with total sales growth of 6%. Another stock falling was Wesfarmers. It took a hit. Let's have a look at healthcare now. Now, a bit of a rebound after a couple of days of sell-offs. CSL rose 5%. It's been beaten down. Cochlear lost ground. Ramsay Health rose. Ansell and Sonic Healthcare fell. Let's go to the top corporate stories now. James Hardie has seen an unprecedented purge of its board after the chair and two directors were dumped by investors at its AGM in Ireland. Coles, as I mentioned, reported a 3.9% increase in sales revenue growth. This includes nearly 5% growth in supermarket revenue. Alcohol sales fell. However, Coles shares did fall to around a 2-month low. Jeffries says Woolworths is closing the gap with Coles. We saw Nick Scali at a record high. That's because Macquarie hiked its price target on an upbeat outlook, and JB Hi-Fi fell to a 13-week low on tepid sales growth. Now, Mineral Resources did well today. It says it's on track to meet its 2026 volume and cost guidance across all divisions. It made record iron ore shipments over the quarter, shares up nearly 14%. We saw Whitehaven Coal hit a 1-year high on announcing cost-cutting plans, and Coronado Global Resources anticipates a recovery in global steel production outside of China. Now, Ampol reported an increase in refining margins and stronger earnings over the September quarter, but investors didn't like the sound of it, and it fell 2.5%. Now, let's have a look at the market action and the themes on the market today. Mathan Samasundaram from Deep Data Analytics joins me. So, Mathan, the Fed cut rates as expected.
Yeah, it's a fascinating time. We had the RBA under pressure after the inflation data came in really hot. I know there's a lot of people didn't expect that, but I think a lot of people actually did. They just didn't want to accept the reality of it. The market had really high expectations of rate cut from the RBA, and at the same time expected inflation to go up. So you knew there was going to be a problem there. And so we moved from that to the Fed, and the Fed was always going to cut rates. Since the pandemic, the Fed hasn't surprised the market. So the implied probability flagged the rate cut was coming, which happened. It was all about the commentary going forward. Inflation is rising. And so in that context, surprisingly, Mr. Powell was very clear in saying employment data still remains relatively strong despite the issues and the latest data not being released for non-farm payroll. So in that context, he was pretty clear that they were fighting against inflation. And so he pretty much flagged that potentially the rate cuts are going to be on hold for the rest of the year till something changes. So yeah, so interesting times when US market is trading at 25-year high multiple. If you're not getting the rate cuts, there's issues.
And as you mentioned, Reserve Bank, it seems they're on hold for a while. Commonwealth Bank suggesting there might not be any rate cuts for some time.
And you can always rely on the banks to go from one extreme to the other extreme. Look, at the end of the day, RBA will try and cut rates at any opportunity. So I don't think it's out of the realm of possibility. But the reality is we had a number of government handouts that suppressed the measured inflation. The real inflation that you and I face when we go to the shops is much higher, but the measured inflation was suppressed, and now that's bouncing back. And that was, if you look at the segments that AB has reported, most of the segments jumped from last quarter to this quarter. So it was a pretty much a broad-based increase. So I think that's what shocked the market. And I suspect the RBA is going to be on hold for the rest of the year and see how the numbers go for the next quarter. And given where things are, it wouldn't surprise me if inflation keeps rising and RBA remains on hold into Q2.
Yeah, and that prospect really weighed on today's market. In particular, we saw consumer stocks sold off.
Yeah, I'm surprised that people are surprised about cyclical stock coming off historical highs. It was pretty obvious. Some of the retailers, retail sector has been pretty much the best players and the rest. So the best players are trading pretty high, the rest are in trouble, and seeing the best struggle is not really a surprise because the average consumer is struggling. Rate cuts, there's a reason why the government offered 5% deposit for first home buyers. They weren't doing that because things are easy. They did that because it's tough. Most of those first home buyers just suddenly they had a thematic that there was going to be rate cuts coming. Well, now that's not coming. So there's going to be a lot of, I guess, disappointed retailers, and that means consumers are going to spend less. So you're going into Christmas, I think it's going to be tough. So I'm not surprised the cycle is turning. You do not want to be exposed to consumer spending or asset bubbles at this point. So anything linked to asset prices or consumer spending is probably going to have a tough quarter ahead.
Now let's turn back overseas, and we did see the Bank of Japan keep rates on hold as expected.
Yeah, the ultimate Ponzi. They defied data for 3 decades, and why stop now? Interestingly, you would think the bond market is flagging, inflation is flagging, that they should be hiking. There's multiple hikes to come. BOJ still doesn't want to do it. And it kind of keeps things out of balance with the rest of the world, but that's been for a while, so why change now? I think it's one of those things that if they do hike, it will put real pressure on the Japanese carry trade, and that will affect the US markets and global markets in return. So, we've got 30 years of carry trade that went one way because the Japanese kept on cutting their cost of borrowing. They are back to, rates, the bond yields are back to where they were, 20 years, 30 years ago. So in the long-term one. So in that context, the bond market is telling you that the BOJ should hike. BOJ does not want to hike right now, but it looks inevitable at some point they will have to hike and hike a lot.
They're talking about elevated inflation, and if their forecasts for the economy go as expected, that they will have to hike rates.
Yeah, I think they have to hike multiple times. It's out of sync with the rest of the world, and their asset prices are running up as well because at some point when they do hike, the yen will strengthen against all currencies, including the US dollar. And so global investors are jumping into Japanese market, buying Japanese assets for the currency play. And when they do, decide to hike, that will put real pressure because at the moment, the bond yields in Japan are going up, US bond yields are coming down, so the gap is narrowing. And if the currency starts to move in favor of yen, well, the Japanese carry trade will unwind for the first time in 3 decades. So interesting times.
Now, of course, the thing investors were watching today was that meeting between President Trump and President Xi in South Korea. So it finished after 1 hour and 40 minutes because President Trump had to rush home to the US to a Halloween party. But we have got a bit of information. President Trump said that Ukraine and fentanyl were discussed. So do you think that if there's a deal, will it hold?
Yeah, this is like a never-ending story. Every second month there's a deal with China, and there's always some issues afterwards, and then it unwinds, and then there's tariff threats, and then there's rare earth threats, and then we do this cycle once again. It's kind of like it's a classic never-ending story. Yeah, there was a lot of media coverage into this meeting. Everyone was basically, social media was putting out updates about every probably 10 seconds. And then the meeting finished. We did not hear anything. They both went to their planes and they exited. So it was something that doesn't smell quite right. I don't think it was as good a meeting as everyone would like to be seen, because Mr. Trump is not someone, when you get a good deal, he does not do things quietly. He has a big song and a dance. There would have been a decent media play at the back end of it. So I don't think it was as great. And China still holds the Trump card, pardon the pun. They hold rare earth, and there's, nobody else can play against it. So in the next couple of years, China has a competitive advantage, and they keep playing that card. So in that context, I think they held the line. I don't think much was done. I think they will both claim wins. There will be vague statements released over the next couple of hours, but I don't think anything substantial was agreed on to change the dynamics.
Okay, thank you so much for your time today, Mathan Samasundaran from Deep Data Analytics. Thank you so much. And the stock of the day was Mineral Resources. Let's have a listen to our experts, Grady Wolf from Bell Direct and Howard Coleman from Team Invest.
So I've personally done very well out of the company, but I got out not because of any concern about the business. They are fantastic business operators. In fact, Chris Ellison runs an incredibly good business. But all sorts of related party transactions. When I've got an agent running my money, which is what's happening when you're a shareholder and you've got people running the company, you want to know that they aren't feathering their own nests at the expense of shareholders. And to discover that he was doing that sort of thing, I think or that it would appear to be, according to everything we've heard, I mean, nothing is absolutely proven, I think is absolutely horrendous.
They've got fundamental tailwinds behind them now with the lithium price rebound finally, and they've got the mining services division underpinning revenue. So again, it's a company that you can't really argue with the fundamentals of the business. So I think for me, it's a love-hate relationship simply because I lost so much money on it, but the outlook is strong and the outlook is there for us. So they've got a strong balance sheet. They've refinanced their debt at a lower rate. So again, that's what you want to see if you've got a debt level. A lot of their debt is not due for quite a long time. So that's, again, what you want to see.
Now let's have a look at the market leaders. Mineral Resources saw record iron ore shipments over the quarter, so its share price jumped nearly 14%, and it says it will only sell its lithium assets at the right place. We also saw Liontown Resources, a lithium miner, that was higher after broker upgrades. Champion Iron went up as well, as did PLS and Paladin Energy. Let's have a look at the laggards now. Data3 had a hit, down 7%. Wesfarmers, one of those interest rate exposed stocks that fell. Block, the payments provider, fell 5%. And as we've mentioned, JB Hi-Fi was also sold off, as was SiteMinder. Let's have a look at the small caps. Narada up 28%. Coronado Global Resources surged on its production report. Bougainville Copper put on 13%, and Playside Studios rose 10%. And looking at the small cap laggards, Lion Rock Minerals lost nearly a third of its value. Kingston Resources was sold off. European Lithium fell nearly 15%. Coastal fell nearly 14%, and Broken Hill Mines also lost ground. Let's have a look at what's happening overnight. The big decision, the ECB rate decision, but in fact no change is expected. And looking at tomorrow, the day ahead, we've got the producer price indexes for the September quarter. The PPI could increase 0.7%. Also the AGMs that we've got on Fortescue, Sandfire Resources and Car Group. Also some September quarter reports from Capstone Copper, Endeavour, Origin Energy and ResMed. Let's have a quick look at the market before we go. The CBO 200 down 0.4%. The ASX 200 lost about 0.5%, finishing at around 8,886 points. Thanks for watching. Have a good night.